Hi, welcome back. Lenore Anderson here, your San Diego realtor, and what we're going to talk about today is an absolute game changer. For most, it's going to be a life changer. Well, for anyone who's willing to move forward and put this into place. Hey, let's say that you're starting out and you want to buy your first place, or you have not owned a home in the past 3 years. I need you to listen up. What we're going to be covering in this video can change your life by creating family wealth for you in a very real way. So if you do meet the first time buyer qualifications because number one, you do not own your own property yet, or number two, you haven't owned anything in the past 3 years, do not go out and buy a condo, a townhome, or even a single family home. Hear me out on this, okay? As a first-time buyer, you can buy a 2 to 4 unit property, which you know is a duplex, a triplex, or even a fourplex as an owner-occupant, meaning that you move into one of the units and rent out the others. This does a couple of things that are almost magical. Offsetting your mortgage with rental income from the other units is a good start, and that's pretty helpful right now, right? But like I said, that's just the start. It also does some pretty incredible things for you too. As part of this strategy, you can get owner-occupant residential financing. This comes with some very low down payment options. Guys, financing for 2 to 4 units is different than commercial financing. It's classified as residential financing. Hey, when you buy 5 or more units, that's classified as commercial financing. So for 2 to 4 units, FHA owner-occupant loans are at 3.5% down. Conventional loans are now as little as 5% down. And if you are a vet with VA eligibility, thank you so much for your service to our country. And you get the sweetest deal possible. 0 down payment. Now, I don't want you to worry. This isn't one of those crazy buy property with no money out of pocket kind of things that you find online. No, with all 3 of these loan types, you're still going to need funds to actually buy a property. You're going to need to be able to cover the cost of your home inspection, your appraisal, and cover your closing cost. Plus, you're going to need some reserves left over. Hey, your mortgage company certainly does not want you to be broke by the time that you close on this purchase. But the important takeaway here is that you are leveraging your purchase dollars. You can buy and control a larger property with a smaller down payment, and that rental income from the additional units helps cover your mortgage, and that extra rental income also helps you qualify. See, lenders count that income as part of your earnings, meaning that you're able to go into a higher loan amount and a higher purchase amount. Now, if you already own your own place, like the one you're living in now, well, that's going to cause some issues when you're trying to use that owner-occupant financing for getting a loan on multi-units. So when you call us about buying 2 to 4 unit properties, you're going to be surprised because now you're looking at 20% down or more. However, we do have a way to get you current homeowners started with investment properties too, and I'll gladly go over that in a minute here. But for now, let's focus on this leverage principle because there is a big difference between 20% down for non-owner occupant loans and those 3.5% and 5% down options for owner-occupant buyers. And don't you forget, active duty and vets still have 0 down loan programs available to them even when they're buying multi-units. If you are focused on getting richer quicker, leverage is an amazing benefit when you're starting out. It allows you to get your foot into the door of owning an investment property. Now, on the flip side, it is a plus if you do have more money available to put down. And that down payment can even come as gift funds from a family member, which some of these low down programs will allow for. So you're going to want to speak with a mortgage lender as soon as possible because putting more money down will get your property to cash flow for you quicker. And when you're looking at buying multi-unit properties instead of single family houses as your first place, it is all about the numbers. Here is a real life example of what we're working on right now with a client. Hey, theories are all good and well, but when you see it in real life, things change for you. At least they do for many of our clients. So here's that real life example. Say you're approved for a mortgage, you filled out that loan application and you've gone through the process. Let's say you're qualified up to $1.3 million and are looking at fourplexes around $1,275,000. With 15% down payment right now, your monthly payment is going to be around ballpark $9,300. Hey, you find a place that you like and we run the numbers on the rents. And the particular building that we're using here brings in $585 a month. You move in to the smallest unit to keep your upfront cost and out-of-pocket cost low, which is currently rented at $1,500 a month. And guys, that current market rent is way under value for this particular neighborhood. Now, at the end of the day, you're going to be paying $2,215 for your mortgage because the rest of the rental income from the other 3 units that are larger offsets your mortgage payment, your taxes, and your insurance for this property. So out of pocket to you is $2,215 a month for your mortgage. Guys, that's to control a fourplex building worth nearly $1.3 million here in San Diego. Yes, you own an apartment building in San Diego and your portion for the payment is only $2,215 a month. Do you know how high rents are here in San Diego right now? You're hard pressed to find anything that's an apartment or let alone a condo payment if you did opt to buy that instead of units at that price. Now, let's take this a step further. Are you still with me here? Because things are just heating up here. Get this. This building needs to have some rehabbing and the rents need to be brought up to current market rents. An excellent opportunity for sweat equity, especially when you're handy, which by the way, we see a lot of in the 2 to 4 unit market here in San Diego. So you're gonna go in and rehab that unit that you move into. You're gonna stay there for 1 year since you bought owner occupied. Now, you have some choices. You can either move out of that property altogether and put a new tenant in your vacant unit at the current market rents, which should be closer to about $1,700 a month or more, or you can do it all over again. Move into another unit in that building and rehab it. Wash, rinse, and repeat until you have all of the units updated and at current market rents. Imagine what that building's cash flow position is at that point. Oh, and imagine what the value of the building is with the units at current market rents and the units are rehabbed. So folks, this is what sweat equity is all about, because now you're the owner of a cash flowing investment property in a highly appreciating marketplace of San Diego. Do I have your attention yet? Good, because here are where things get extra sweet. As that property appreciates through the years and you keep your units at market rents by doing annual rent raises, your cash flow is going to increase. And you're going to go find yourself a seasoned accountant, one who knows the rules when it comes to investment property, and preferably one that owns income property too. That way you get an expert and they will explain how you are able to depreciate that property on your taxes for up to 27 and a half years of your ownership, all the while that building is appreciating like crazy. Oh, and I want you to get in the habit of holding on to any and all receipts. Now, the reason is that each unit that you rehab and each repair that you make helps in a couple of ways. Number one, all of those items are now write-offs. And number two, you will attract and keep way better tenants. Hey, good tenants take pride in their home. There you have it. It's a self-amortizing asset, which is a fancy way of saying an investment property that pays for itself through rental income. Guys, this is a no BS, surefire way of creating a cash flowing investment property for yourself. An asset that appreciates in value at the same time depreciates on your taxes. Hey, I told you, buying an investment property as your first place is a game changer. Actually, let's just go with life changer, creating family wealth in a way that your job just can't do for you. Now, for you guys that own your own home already, remember I said we'd get you a solution without 20% down earlier, right? Hey, it's time for you to research the Senate Bills 9 and 10. Both were passed recently here in California. Depending on the size of your lot, you can build that income property right at your own home now. You can use the equity in your current property to get a HELOC, a home equity line of credit, to add an accessory dwelling unit to your current lot. The state, the county, and the city are all on board, streamlining the process all the way. Hey, they even provide you actual building plans for different models of these ADUs, as we call them. You can contact your county or your city to get the details. Plus, there is a new wave of ADU builders out there that will take you through that whole process. So I'm willing to bet, well, I definitely hope that what I covered here has sparked a ton of interest and has even generated some questions for you. Is this easy to do? yes and no. Is it the right option for you? Well, that's hard to say without having an honest conversation. Hey, there are 2 things that we can suggest. Subscribe to our free monthly 2 to 4 unit market report. We've got a link for that down below for you. And just go ahead and reach out to us. Our contact info is down below as well. Hey, helping folks like you come up with real life answers, solutions, and results is what we actually love doing. Creating family wealth and helping you get out of the rat race by buying, owning, and investing in San Diego real estate. Appreciate you watching. Oh, and be sure to check out this video next.